Why does the Fed headed by Bernanke do quantitative easing?
To stimulate the stock market.
Quantitative easing is the purchase of Treasury bonds by the Fed, right?
Absolutely.
How does the purchase of Treasury bonds stimulate the stock market? Aren't they different asset classes?
Yes, they are. But they are heavily interconnected and exhibit a measure of inverse correlation.
Inverse correlation? How is that possible?
When appetite for risky assets, also known as stocks, is high, people dump less risky assets, mainly U.S. Treasuries, and jump into stocks. And vice versa.
Interesting. So the Fed is encouraging people to jump into more risky asset classes such as stocks to stimulate the economy.
Correct. When this is done, the incentive to own treasuries is significantly reduced. The Fed is actually using market tools to tell people to do what it wants them to do.
Interesting. So quantitative easing incentivizes risk-taking and discourages people from hiding under the safety of U.S. Treasuries.
Exactly. In fact, the traditional safety asset classes, mainly U.S. Treasuries, now become risky due to the scare of Fed raising interest rates, thereby decimating the capital invested.
Cool. Has this strategy worked so far?
Yes, to a great extent. That is why the U.S. market has rallied. Europe, on the other hand, did quantitative tightening, and their markets are in the dumps for that.
How pathetic. They should have hired Ben.
Yes, Trichet practically failed to resuscitate the European economy quickly enough, and now it is gradually slipping into complete chaos. If the European Fed had adopted the same aggressive easing policy as the U.S., the recovery would have been much more powerful and sustainable.